You open the chart and it's like everything at once. Lines, stripes, arrows, some zones that are purposely important, but a minute later you don't even remember why. And the main question going into 2026 is, if all that stuff is so smart, why is it so hard to apply? That's the pain right there. Most trading systems don't fall apart because of the market being bad. They fall apart because the system is too smart for a real human. Today we'll break down a 2026 trading system, an elementary combo, no overload, and no feeling like you accidentally enrolled in university. Watch till the end because this is logic you can actually stick to, even when the market decides to crack a joke first. Today our trading strategy is built just on two indicators. And no, it's not because we're too lazy to add the third, it's because extra tools usually get in the way, like a fifth passenger in the front seat. So what we're using is Bollinger Bands and a moving average. We start with setting up the moving average, set the period to 100, make the line red thicker so you can see it even if you're staring at the screen with one eye. Now we add Bollinger Bands, period 20, standard deviation default. Set everything up clean and save it. After that, the chart already looks like you can actually have a conversation with it. And right here, I immediately see a spot with both indicators are nodding in agreement. I open a buy trade. Why? Well, because the 100 period moving average is our main navigator here. It's built off the last 100 closing prices. In simple terms, take 100 candles, average them out, and you get a line that shows the market's overall vibe. If the price is above the line and the MA itself is pointing up, then we're looking at an upward move. That's it, no philosophy guys. Now about Bollinger Bands. It draws a price corridor, and this is where newbies often fall into a trap. Most people love trading off the upper or lower band. Reminder, Bollinger Bands also has a moving average inside it. That SMA 20 running down the middle line, the upper and lower bands are just deviations from it. And if those bands are stretched wide and the market is clearly not chopping sideways, then there's a high chance the move continues. In that situation, we don't argue with the market, we ride the direction. That's exactly what we're seeing right now. First trade closes in our favor. By the way, I've put together a free resource base. It's a compact digest with proven setups and their actual results, with detailed indicator setup instructions in the pinned messages, with fast interpretation of important macro news, with practical manuals on risk calculations when using martingale to reduce the chance of total wipeout. All of this is available in one place. The link is in the description under the video. Great! The market's in a good mood today. Let's keep going and look for the next setup. The picture is almost the same. The 100 period moving average is still pointing up. Price is above it and Bollinger Bands are stretched again. If you traded Bollinger strictly by the book, you might think about opening a trade the other way, since price is touching the upper band. But we've already defined that the market isn't sideways, so we support the up move again and open another buy trade. Touching the upper band here isn't a reason to panic, it's a reason to look at the bigger picture. Price got a pullback and will most likely continue higher. You can also use the middle Bollinger line, that same SM20, as extra confirmation. It works like a dynamic level. When price comes into it, you often get fluctuations, just like we're seeing right now. Everything lines up at one point. The second trade also closes in the green. Perfect. Let's move on. We open the next trade a little bit later, again on the buy side. The instrument is USD against JPY OTC. The direction is up, price is sitting in the upper part of the range, Bollinger Bands are stretched again, and price is above the SMA 100. That's a key point. Once again, we're supporting the move. Another trade closes with a positive result. The result is there. That's enough. We lock it in and move to the withdrawal. We create a request and calmly wait for it to be processed. After a short while, the platform status updates and the funds are credited. That wraps up the trading session. No rush, no drama, just humor and common sense. If you want to go deeper, learn how to combine different styles and strategies and build a hybrid system without overcomplicating things, send me a message. I've got a private community where we break down real member cases, test strategies for different styles, and help find their own path in trading. Selection is manual. I care about group quality, not headcount. All contacts and details are in the description under the video. And make sure to subscribe to the channel. Coming up are breakdowns of specific strategies for each trader type, with live entry and exit examples. Over time, access will be closed and the community will become autonomous. And a simple takeaway at the end, a trading system for 2026 isn't about complexity, it's about clarity. When you understand what you're doing and why, the system starts working with you, not against you.